Here we are looking at Gary Glover's weekly report. The market has been climbing and climbing and climbing, but now it seems to be going at a slower rate. The interesting point here is that Gary Glover's been looking at the market and sees a plethora of opportunities. It's that rotation that he was talking about quite some time ago. So we're looking at the indices to understand where they are, what to expect next, and then also deep down into the next level of the trading shares to find where the best opportunities are and to understand why it is that they're lighting up and what it is that he's looking for them to do to create that optimal opportunity. Good morning, Gary. How are you?
Yeah, I'm good, Chris. Yourself?
Well, the market has been climbing, so it helps to make that quite positive. Longer term portfolio is doing well. Momentum trade is looking at, like you've been talking about for the last couple of weeks, 0, 1, 2, 3 bottoms, some good explosive movements, working with the leaders near the 52-week highs, all of that kind of thing that you've been looking for the opportunities. Before we jump into the indices and see how that fits with the cycle and the blueprint, I'm interested to see that you've 78% invested. So does that mean you've sort of been taking some profit, taking some chips off the table, or what's been happening? Because a couple of weeks ago you were fully invested.
Yeah, no, look, there's a couple of hit targets there. But, last week we got stopped out on a few gins, JIN, which actually sort of has come back and retested the low, and then, possible false break on that low. So I've actually already added some back in the last sort of last couple of days there. So, but yeah, I'll just watch that one at this stage there. But yeah, most of the other things we're sort of still, most of the stuff we're sort of holding is still sort of long that. So got stocks in most of it. There's a couple of sort of smaller ones I don't have sort of stops on it, and the funds as well. I was happy to probably ride those out till maybe the top of the cycle here. But unless we sort of start to see heaps of other trades set up there, probably just sort of, stick with what we've got at this stage. But just still trying to add a few in there. I think also the opportunities there. So that feels like I was even asked today, the market had a good bounce here, but it's not, all the sectors aren't running together. There's definitely, rotation there. There's definitely sort of some sectors that have been weak, and other sectors that have been pretty strong and running. Look, so there's a few sectors that I think look overdone, and then a few sectors that are sort of coming off lows as well. So, there's still plenty of opportunities around.
Well, when we look for the opportunities, it does help to have the backdrop of your 2025 blueprint. And you've said a little while ago, we're in that sweet spot, that May, possibly through to August, we just grind higher, slowly and steadily. Where we are on the market, we're looking at the NASDAQ for this chart, the first one. You've talked about the drop, you've talked about the rally. Anything to change that, or we're still sort of just looking for that steady grind north?
Yeah, I just think we've had a pretty sharp bounce there. Been pretty, strong, really fast recovery back up to the top of the band there. So just, I think, like we saw a pretty strong bounce out of October 22 and October 23. And I think October 22, it ended up sort of consolidating. I think it's sort of like one of the legs there sort of had that little 3-wave pullback there. But then other times you run up pretty hard there, you can kind of consolidate in an upward manner. So I just think we're probably going to get the upward type of consolidation there. So, we also had that power trend sort of triggered as well. So normally that power trend trigger, I think on average there sort of goes up another 74 days is sort of like the average length of those. I mean, sometimes they can only go short, other times they can go a lot longer as well. But yeah, so I think just the whole, that chart that really is really interesting, Chris, that monthly chart there, because that just sort of shows each pullback has just sat on top of the previous high, and then it leaves in a strong. So it's like a sort of staircase building on top of each other. So the last thing on the trend is just, again, we just pulled back and sat on top of the previous high, and that leaves us in a strong position. So oftentimes we saw there, particularly that 2020, the COVID sell-off, that was quite a large one there, but all it did was just come back, sat slightly above the old high, and then look how fast this was up there. So, this has come back here as well. Again, it sat on top of the high, so it actually didn't quite come to the last high. That's a tiny bit of spacing there again. That leaves it in a strong position. Just, again, it's just a nice trend just building on top of the previous move here. So normally when you see that occurred in all these other occasions, you normally go to a pretty high and that long tail, and with the ones we've seen that really take off there as well, they can get there a lot faster than everyone thinks. So, the 60-year cycle, we know in 65 there, the market sold off pretty heavy, around 11, 12%. And then I think within 3 months, it had taken the high out. So there's no reason why we can't get a new high here within 3 months of this April 7 low. So, it showed great strength here so far. So I just don't see anything. Not seeing any signs of weakness here yet. Trump's just got his tax cut policy over the line too. So, we've had an interest rate cut as well here. So just not sort of seeing the, inflation's still sort of, although bond yields have risen a bit here, inflation's still sort of low here. So lots of talk and stuff there, but the data's not sort of, the data's sort of still pretty positive at this stage. So still favour a move to new highs here.
So when we look to the other markets, we also look at the Aussie, and we'll have a look at some others in a second. But for the Aussie, it's a little bit different. That power trend, we don't have the same depth of data. We don't have that same sort of crossover. Are you seeing that transpire and follow through just to continuous for that grind slow grind north to August?
Yeah, that's a good chart there, because you can sort of see how that October 22 came out of the gates pretty hard there. Then it had like a little 4-week consolidation, and it went to a new high. And then obviously we came out of the October 23, went up pretty hard there, and then the consolidation was basically was on the upward sort of cycle. So that's the two sort of setups that you normally sort of get when you come out of the gates this hard, off a good low. So I just don't see us pulling back here. I think we're going to grind high here. That's the sort of setup here. I see a lot of leading stocks in the US, Chris, that are congesting under the high. So cup and handle type of setups as well. So got to go back a few years ago. There were I think if you follow William O'Neill there, I can't remember which market it was there, but they were talking about, put an article out, it's cup and handle city. Basically, it was just the proliferation of stocks that were all setting up in the same setups there, and they all popped and went through here. So just sort of seeing something similar there with that power trend as well. And just we know that this sort of April through to August is the sweet spot for this sort of cycle as well. So I just can't get too negative here. I know it might slow down here, might be a bit of a grind. Definitely some sectors I'm avoiding, but it seems to be still plenty of opportunities there.
Well, plenty of opportunities. We do want to have a look at those individual shares. Before we do, the Dow Jones, the oldest indices that we have to use and has the most data on it. Anything different on that one, or it's falling into the same suit?
Yeah, I mean, I think it's just, just looks pretty strong to me. So it's had a nice bounce out of here. I just think it'll just follow that. It's going to follow that October 23 path there. Just come out here and then just kind of grind upward manner here. So, I guess the biggest mystery for me, Chris, is that because this trend, those sort of monthlies are all sort of sitting on top, and it's, looks like we're going to go to a new high. What's the next level here? Because all those, if we go back to the 0709 bear market, every sort of squaring of that range has been resistance for the market, like the 100, 200, 300, 500. So that's actually stopped the market for a period. So I'm wondering, if we crack through this top of this level here, what's the next level? So that's the thing I don't know. So but at this stage, I think we'll just sort of see how we move into August there, and then we'll start to examine what's happening later on.
Well, you've talked about just trading the chart in front of you in previous times, and you also mentioned that there have been a lot of cup and handles. In your last few interviews, you've talked about 0, 1, 2, 3 bottoms working exceptionally well in the current market on the ASX. If we have a look into these companies, John Ling, JLG, that is one that you have followed and looked at for a while because you have been interested in seeing opportunity from it. From a fundamental perspective, you've talked about relative to revenue, this is quite staggering, and it has popped up. So what changes and what's the update with JLG?
Yeah, so we got a sort of descending wedge sort of pattern there, and then we started to break out of that, started to build sequence of sort of higher lows there. And then we had that definitely sort of sideways sort of, sort of congestion there. And now we've sort of broken out of that as well. So sort of definitely some stronger volumes on that break too, which is a solid sign there. But again, yeah, it's sort of like, this one's just really interesting to me because the valuation seems really, light on here. So, what are we, 650 mil now market cap here for something that's doing like 1.15 billion of revenue or something annually. So, you add on top of that, we've just seen some, massive storms flooding. Yeah, flooding here, Queensland, New South Wales. So this is just right. That's basically what they do, these guys. So, there's an uptick in the amount of work there, then that's just going to be even more positive for John Ling. So, it doesn't carry a stack of debt there and does have a US operation. That's the concern, is that whether they can do what they've done in Australia here, and whether they can roll it out in the US. But it's still it's only a small part of the business so far in the US. It's not a big part there. So I kind of think, if worst case scenario, if it did fail in the US, it's not the end of the world. It's not a massive chunk, So
So it might take management's attention, but not a huge amount of capital.
Yeah. So I just think this is one that's got real upside here. I mean, like most companies will be trading at least one time's revenue, so plenty of trade way beyond that. So, so I think this has got upside. I just think this one looks, it's probably just that downgrade cycle. So it's kind of, it's kind of got kneecap on the way down here. Sort of, sometimes you have that great success, everyone gets, runs with you and grow, and then all of a sudden you have a few growing pains on the way down. It's up the stairs and down the elevator, as they say. Just resulted in this company being kind of marked down here. So I just think it's just pretty interesting here. I think it's definitely one to sort of keeps building nice, or keeps sort of congesting there. It's probably one I'm going to try and maybe even add into, even though I do have a fairly decent sized posse here already.
Okay, well, that tells you you are identifying a decent opportunity in a rare treat. Another one is Growth Point, GOZ. We have seen this before. If we look back a couple of months and you understanding sort of this higher lows that have been building their way. A little bit of an undercut here, but did we actually undercut in the recent one in April, or is it we equaled it? What did that look like?
Yeah, equal it. Yeah, so it's actually like what they call a higher double bottom. So I don't really like double bottom setups there. So it's sort of something that if you look at study Bukowski and stuff there, the double tops and double bottoms there, the failure rate's very high. But if you've actually got a low in place and it's actually like a higher double bottom, the success rate is a lot higher. So then you're charting a trend up. And also if you've got a high in place and then you get a lower double top on the way down, that's also quite a negative signal as well. That the probability goes up a lot more for that. So high double bottom here has actually just got a bit more positivity in there. And that's your 0, 1, 2 sort of set up as well here, kind of more base building sort of characteristics as well. So what sort of jumps out there is that volume too. The last 3 or 4 weeks, you've seen some pretty good volume on this out of this last low. Also seen the sector be pretty buoyant too, as especially on 9 Chris, sort of Stan Weinstein there talks about, if you've got sector strength there, and the stocks actually are looking strong as well in a strong sector. That's
A large part of the puzzle.
Yeah, your odds of success are much higher, and more importantly, the size of the moves are much higher. So the average sort of rally when you've got the sector kind of showing strength as well is normally going to be a lot larger there. So
definitely, if we want to trade a good market leader, you want to have market leaders with peers, because all the research shows they're the ones that are going to run harder, faster, and give us the more oomph in our trade. So that is good to see with GOZ. Woodside. Well, we definitely know how to look at the peers and the sisters in that group. We know from the petrol browser that oil prices haven't been as high. They're quite cheaper at the moment. Australia does run different to the WTI, what we fill up at the browser, but still it's a bit of a gauge that most people can relate to. What are you seeing here with Woodside?
Yeah, it's just, we talked about these basing patterns there, Chris, as well. They've sort of been setting up all over the place here, and oftentimes a basing pattern can take a few months to sort of set up here. But out of this sort of April 7 low here, we've just seen a lot of them sort of set up within a month. That's still a good sign here. We're sort of seeing these sort of 3 higher lows and then starting to take off, and then now we're sort of taken off here. We've just pulled back again, and the whole thing's sort of coiled up here. So you can see that volume has tapered right off on the pullback, and the price has been, tightly congesting there above the previous high as well. So that's pretty attractive. So that's how you sort of start. You normally sort of start with a, overlapping trend, but building a series of high lows, and then eventually it should break out, sit on top of the old high, and then go. And then when it's really going, there's spacing there, so it pulls back and it leaves spacing between the last high and the current low. That's even stronger. That's a sign of strength. So at this stage, it's congesting here above previous high, leaving a bit of spacing here. So if it does sort of break up here out of this little wedge here, then that's a pretty good sign there. So it leaves in a position of strength there. And as we know, we're seeing uranium, see the oil and gas here, started to see some of the coal stocks as well. Just seeing that energy block really show some strength there. So, I know sort of in the momentum report we cover on Friday there, we highlighted uranium there. The first couple of weeks out of that April low, that was the sector that was lighting it up. So it was definitely the sector that's showing the greatest strength out of the low. And, it's obviously gone on with it there. So we've definitely seen a bit more strength out of these sectors, which have been probably in a downtrend for a while here, particularly probably maybe the oil sector as well. So, it is interesting now. I mean, I think the other thing that's pretty interesting as well is that I didn't post this chart here, but we've seen the Aussie sort of recover sort of from, 60 back to 65 here, Chris. Starting to see the US dollar weaken off here as well. So if you follow the Aussie dollar long enough over the 2 decades like myself, you realize that, when we get a really strong Australian dollar there, it's normally quite strong for most of the commodity basket itself. So there's a real strong correlation with strength in the Aussie and strength in commodities. So it's just interesting here. We've seen a nice wash out in that Aussie dollar, and we've seen some strength in the Aussie, and we've seen a lot of talk about the demise maybe and the falling out here of the tariffs is that the US dollar is falling. There's a lot less love for the US dollar, and a lot of macro guys talking about shift out of the US dollar as well. So it's just interesting there. I think that the Aussie sort of continues to strengthen there. I think you could see commodities continue to strengthen as well. So it could just be good for that sort of whole sector there.
I definitely agree on that. That's one metric that I look at each morning. We share with members occasionally is a video where we run through it and look at all of the individual commodities that'll help drive a force. So whether it's copper, gold, we're looking at precious metals, coal, iron ore. It's one thing to look at the commodity itself, but if you look at it in the Aussie dollars, that really helps explain why we can have just suddenly, kind of like you're inferring there, you can just have a whole group of mining companies or energy companies just power on and start leading the Aussie market. And it seems like it's left the rest of the market and the global stand behind, but it can just be a function of what's happening with the dollar. So very interesting on that one. And this is something we were talking about before, Aries, the coal companies. So you've talked about looking and following that function of the market being how the Aussie dollar impacts trading individual shares on ASX and how you can find those opportunities. SMR, coal exposed companies on the ASX in general, you've traded them for a while. What have you learned from trading coal companies on the ASX, and why does that mean you're interested in this one today?
Yeah, there's 2 things there. Obviously, like we know over the years, Chris, that a lot of the coal names disappear, and they don't disappear for bad reasons. They disappear for good reasons. They get bought out. So that's sort of one thing which has happened to a lot of the sort of smaller names over time there. So look, Stanmore does have a reasonable market. I think the market cap's about 1.7 billion, which is pretty sizable. So it's not that small, maybe smaller than some of the other players there. But we're just seeing big volume over the last couple of months at this low here. So that's kind of like accumulation sort of style. So it's almost capitulation there, but also some big volume coming out of this low as well. And the P is about 5.5 here, and the yield's around 9-10%. So, but those can be traps as well. We do know that with commodities and stuff there, that they can often look their cheapest. Sort of, when
Often.
yeah. So like, you can get caught sort of thing. Oh, yeah, the P's are so low, yield so high, but then the cycle changes there. So that's sort of something to be mindful of there. So you definitely got to control the risk here. But again, there's definitely some value. There's definitely some value there. So that the coal price, energy prices still remain pretty firm here. Then this has got some upside potential. I mean, we know with those coal stocks, Chris, as well, is that when they can trend for like a 1.5, sort of 2.5 years, and when they trend down, they can trend down for 1.5, 2.5 years as well. So they do go into these they're quite cyclical sort of stocks, and those the really long running declines and long running bull trends as well. So they really can have big moves once they run here. So that's sort of if you think about your sort of trend traders and stuff, your tail traders there, this is exactly the type of stock they want to be trading, because when it turns down, it can run down for a long time. When it turns up, it can run up for a long time as well. So that's I've just seen that volume there, and but I know the valuations can be the tricky part, but I just like what I'm seeing here so far. I think if this breaks out of the upside here, goes above 208, that's going to be a really good sign here that it's sort of, I think. So, what we break for the top side there, I mean, you've seen the last probably 4 or 5 days, the price action just tightened up. It's probably trading in like a 3 or 4 cent range, and the volume's dried up too after having this big volume. So, the volume's dried up the last 4 or 5 days as well. So the whole thing's coiling up, tightening up here. So definitely definitely catching my eye at the moment. So, yeah.
Well, the coil trading, yes, you've definitely pointed that out many times before to see the opportunity before the breakout, and that can kind of be the marker. A final chart that we'll look at is Jumbo Interactive, JIN, GIN being the ticker. It was one of those success stories. It was just a phenomenal returner and stellar runs. And I know in previous interviews in the last couple of months or years, you've talked about how that jackpot cycle does influence it. And we know if you're driving past a newsagent and you suddenly see a queue of people waiting out the front, scratch your head and say, wonder what's going on. It can often be those massive jackpots from that night, and everybody wants to buy a ticket. So clearly, if we don't see people queuing up at the newsagents all the time to buy their lotto tickets, well, it tells us that it ebbs and flows. But they have this online position, so we're not going to see them queue up online. How does that fit into the opportunity that you see here with GIN, which is trawling at the bottom, even though we have seen the market bounce in the last couple of weeks and months?
Yeah, look, it's just it's one of those sort of stocks that goes through the cycles. There, it goes through cycles where the jackpots go off for regularity, and then they go through a period of time not having jackpots and stuff there, and that does sort of affect sort of demand there. That's a normal cycle too. We'll go through periods where we'll get a sequence of jackpots back to back over 6 to 12 months, and then we'll go through a lean spell of 6 to 12 months where we don't get it. So we've kind of GIN's gone through a bit of a lean spell here. Not too many big jackpots going through here, but that we know that cycle will always sort of changes there. So it looks pretty simple business, pretty good margins on the business as well. So pretty confident this one will change back here. I know this has come back and retested the low, Chris. That's sometimes we've seen these sort of ranges there recently where you come back and retest that range, and then that's the point where they can turn here. So this is one that I actually did get stopped out of there last week, and I've just put a position back on again here, just because I think it might have actually done a false break here, gone to a margin new low and then reversed there. So once it actually closed back above that previous low there, I thought I really should be adding Aussie there, because then I can put my stop in pretty just under the current low. So nice risk reward. Even though our first trade didn't sort of succeed here, it still can recover there. I think look, the last 3 or 4 days have been pretty good volume too. So all of a sudden we started to see some stronger volume signs there. So yeah, looks pretty looks pretty good setup here to me. So there's a little bit of timing there. I know it's a big few little time cycles there, but not bound by those, but just when I see those sort of quarter year, half year cycles sort of all culminating at the lows as well, it sort of gives me a little bit more confidence in that this might be an important loan.
Very good. Well, we know that you have had a great amount of success with trading false breaks and springs. And we know from David Weiss's perspective, he said you can actually just make a living from trading springs. So we'll put a link here on the right-hand side for anyone who wants to see a video detailed on that trading setup, and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.